Welcome back to Making Money Matter, ladies and gentlemen. I'm your host, Kerry Stevenson, and I have got something very interesting today. By the way, ladies and gentlemen, if you have been living under a rock, maybe you won't have noticed that the gold price is at all-time highs, as is silver, and I don't think it's stopping anytime soon. So I've asked Caleb Stroup, he is the president and CEO of Headwater Gold, to come on today. They are listed on the Canadian Securities Exchange. Don't get yourself worried if you're down here in Australia, because I'm going to explain to you how easy it is for you to get access to these shares. They're also on the CSE. The ticker is HWG, but they're also on the OTC in the US, which is HWAUF. I hope I got that right, Caleb.
You got it.
Thank you. So it's all about gold, ladies and gentlemen. Headwater Gold in a great environment for the pricing today, in a great jurisdiction, that's the Western US. They are a hybrid prospect generator. So I'm going to ask Caleb to explain what that means, and also what they're doing with the big boys, such as Newmont, Centerra. They've got some really interesting prospects going forward, but I'm not going to tell you all about it. It's exciting times for them. Their market cap's just a little over 30 mil Canadian at the moment. So plenty of upside, but as always, ladies and gentlemen, not financial advice. Do your own research, but I've asked Caleb to help us with that. Caleb, thank you so much for your time today.
Well, it's great to be here. I'm excited to share the Headwater story with you and your audience here.
First time on the program. So I love getting the Canadians and the Americans over on the channel, because I think, as I said just at the start, this is it's a great time to be alive, and it's a great time to be in gold. You're the president CEO. You've got a great background in this industry. Give us a quick overview of who are Headwater Gold before we get stuck into all the detail.
Yeah, so Headwater is an exploration company focused in the Western US with Nevada as our core focus. We focus on the early stage exploration side, trying to do, high impact exploration to make new big gold discoveries, the discoveries that are going to get both the markets and the major mining companies excited. Nevada, is definitely the focus, and we've been very active generating projects and establishing partnerships over the last 4 or 5 years, and big portfolio projects, about a dozen projects in total. And of those, we've got partnerships on 5 of them now with producing mining companies.
Okay, so you've got about a dozen projects. 5 of them are with a couple of the majors. Talk to us about, if you will, how did you attract those majors? You've got a good, strong background. I think you worked with Kinross in the past, haven't you?
Yeah, so I spent, I would say, about half of my career on the junior side, and then about half with the majors. And I think that actually tracks with several of our technical people, in the company, as well as some of our board members. So we've got a pretty diverse experience base, and truly understand, what it is that gets the major mining companies interested in an opportunity, and what sort of things they're looking for on the global stage. And that's at least one piece to that puzzle for sure, is looking for the right things in the right places.
Before we go into the structure of the deal with Newmont, if you like, one of the things that piqued my interest was the fact that your most recent financing was with my dear friends Jeff Phillips and Rick Rule, who have come onto the register. How did that happen? Did they reach out to you? Did you reach out to them? Because I know those guys, they do their own due diligence, and they've now recently, they like the sound of Headwater Gold, and they've popped up on the register.
Yeah, so they were, I think, both shareholders previously, but were looking for opportunities to significantly increase their position. And some of this came on the heels of continued advancements in our business model and showing scalability, bringing in some new partners, bringing in some new projects. And yeah, it was put together at I think a pretty timely basis here, the early innings of a good gold market, in a time where we're looking to cash up a little bit to get more aggressive with what we're doing here.
All right. So in getting more aggressive, we said at the start, I think you mentioned it, you've got about a dozen projects, 5 of them are with the majors. How do you stay focused with so many? And why do you need so many projects?
So one thing that I didn't touch on the beginning is all of our projects fit one very specific geologic model. We're looking for high-grade epithermal gold deposits.
Okay.
So we've essentially developed a set of criteria to explore very systematically through a number of different opportunities that all fit those criteria. And in early stage exploration, in my view at least, I think you really need to take a portfolio approach and have a lot of shots on goal. If you're looking for really high impact new exploration targets, these aren't sort of retreads of things that have been drilled over and over in previous cycles. In most cases, they're new targets that we've generated that are often somewhat conceptual in basis, but that's where a lot of upside comes. If you can prove that concept, you can, that's how the big discoveries are being made in Nevada. And, if you think you're going to go do that with 3 projects, yeah, you might be right, but you have a lot higher odds if you have a dozen.
Okay. Just if you wouldn't mind, you touched on the exploration model. Can you just explain that a little bit further for us? Because I didn't quite cotton on to it.
Sure. So the key thing, and I'll try not to get into too much technical
Yeah,
language
don't go
here
too tech
in
doggy.
describing the alteration facies and all sorts of things that we look at. But overall, one of the sort of leading deposit classes in Nevada is epithermal gold deposits. You can kind of put things in 2 different broad buckets for Carlin type deposits and epithermal gold deposits. Epithermal gold deposits, there are many world-class examples right here in Nevada, dating back to the 1800s with the Comstock lode, the Aurora, very high-grade Aurora mines, Round Mountain, Kinross's, 20 plus million ounce
Wow.
gold deposit in Nevada. Several other examples, Sleeper, Midas, and possibly most notably the most recent being Anglo Gold Silicon Merlin discovery, which is a brand new discovery in Nevada. It's an epithermal deposit. Over the last, I'd say 5, 6 years, they've put together, I think, 13 million ounces right now. And everybody I'm talking to, clearly thinks this is going to get quite a bit bigger. So that it's truly a world-class tier 1 discovery right at our doorstep here. And I think there's a ton more opportunities for this sort of thing. The one thing to keep in mind is that we're exploring a place like Nevada that's had a lot of activity since the 1800s. And if you're expecting to stumble upon an outcropping high-grade gold vein, you're probably a little bit late, maybe like 100 years late. And the Silicon Merlin discovery that Anglo made is a great example of this. It was completely blind to surface. There's
Wow.
basically no detectable gold at surface, but they utilized, a fairly standard geologic framework for targeting through alteration caps and testing targets at depth. And overall, we can get a pretty good sense of where we're at in a epithermal system, how big it could be, what the potential is, and most importantly, what sort of depth levels to expect the gold mineralization to occur at. And in a fully preserved system like this, typically you're expecting the gold to come in at, say, 150 to 225 plus meters depth. And
Okay.
the key opportunity that we sort of launched this whole company, this whole concept on was in previous generations of drilling in Nevada, those depths really weren't adequately tested. People were looking for outcropping deposits that they could put a oxide heap leach on, and pretty much stop drilling at 100 or 150 meters. And so we recognize many opportunities that there, of big alteration systems that could be of the scale of silicon that haven't been drilled to the appropriate depths to test for something big. And going back to your previous question, about how, the number of projects in the portfolio. We assembled as many of these as we could, and went around very systematically putting these together, and now have implemented a business model to go through and drill test these, in a proven model where we think the appropriate depth for high grade gold mineralization is. And it's now a bit of a numbers game to see, which ones of these actually have that bonanza high grade gold at depth.
Couple of questions on that one. When
Yeah.
you talk about epithermal, can you just give us, for those that are watching that would go, positives, just give us a brief overview.
Yeah, so it's actually very simple. It's you can think of these as extinct hot springs. So think of Yellowstone or some of the active hot spring fields in New Zealand or things like that, where geothermal waters are being sort of pumped up from depth along structures, fault structures, and in those fault structures, which are the plumbing systems for the geothermal systems, there's specific events that can happen that deposit precious metals in a specific horizon based on where the fluids boil, the geochemistry of the host rocks and the fluids themselves. But the key thing is that if you have that environment, you have a high potential for a window somewhere at depth that has high grade precious metals accumulated. And there's a lot of different tools that we can use to predict where that might be in advance of drilling. But ultimately, yeah, you do need to drill them.
Why is Nevada such got, because Nevada often comes up, it's just such a high grade gold in Nevada. It all just always comes together. It's always Nevada. Why?
Yeah, so I mean, there's a few places in the world, geologically speaking, that have had, just the perfect storm geologically. Part of this is it's been a very active continental margin for many, many millions of years. So roughly over the last billion years, there's been a series of rifting events, thrusting, uh, magmatic arcs that have swept through, all in the same, tract of land here. And there's a lot of other components, the crustal fertility of I'm gonna get too far into the weeds here if I go any
Don't
farther.
worry.
So
I'll stop you, Caleb. Don't you worry about that. Well, look, um, I just find that Nevada is such a great place to be, and that's where you guys are. That's where
yeah.
all your projects are, just in Nevada. Is that correct?
Yeah, we have a few projects in Idaho as well, which is basically extrapolating the Nevada geology to the north across the Idaho border, but we're
Okay.
chasing the same sorts of things.
Okay. Talk to us about, because we spoke about right at the start. I said you're a hybrid prospect generator, working with some of the big boys. One of them is Newmont. I want you to talk to us about the deal with Newmont. What's the earn in? What's the money coming in? Because I think that this is important, ladies and gentlemen, for you to understand that these prospect generators, some of the big boys are doing the earn in, so it's non-dilutory for shareholders. Is that correct?
That's right. So we have two projects in partnership with Newmont, two separate earn-in agreements.
Okay.
And that's, I mean, I think that's one thing about Headwater that people should take a bit of notice to is the sorts of deals that we have been able to put together. They're not your typical, soft project generator earn-in deals that you see a lot of, especially in the softer markets. There's serious amounts of capital required for the major to deploy and to earn in. And just as an example, our Spring Peak project under partnership with Newmont is one of the most active that we've had over the last few years. Going back to the beginning there, Newmont, or it's actually at the time Newcrest, and then it was taken over by Newmont through that acquisition. But they agreed to fund a firm minimum commitment of $5 million US. That was, a firm commitment that they had to either spend or pay us the difference in cash from the very beginning. That was included in a $15 million US stage one to get to a 51% interest. And then after that, they have an option to spend an additional 40 million US to get to 65. So it's $55 million US to get to a 65% interest. But really, I think the big one in my view is after that, to get to a 75% interest, they have to deliver a pre-feasibility study with a minimum of 1.5 million ounces of gold equivalent. So our shareholders are carried all the way through that stage with a carried 25% interest in a Newmont size pre-feasibility scale project. And at pre-feasibility as well, this is the same with all of our deals, there's a royalty component that kicks in. So not only do you have the 2% or sorry, 25% project interest, we also vest a 2% NSR on all of the ground that we staked on open ground, which is the vast majority of it, and a 1% NSR on some sort of core pieces that we put together with some prospectors. So you have carried 25% interest plus the royalty, and it's worth considering. Newmont is not looking for 500,000 ounce deposits; they're looking for massive game-changing sort of deposits. So from a value proposition for our shareholders, I think those sorts of deal terms leave really a ton of upside for a $30 million company.
Do you get any management fee to do the work on these projects at all?
Yes. So both with the Newmont projects and the projects we recently announced with Oceana Gold, we're the operator. And so we run the exploration and are, right on top of the technical work that's being done here and are carrying that out. And as a result, collect a 10% management fee. So that's actually a fairly significant piece of the model. That management fee allows us to, cover the majority, or in some cases, all of our corporate burn and overhead. And actually in 2023, we somehow made a profit of $200,000. I wasn't necessarily expecting that, but that's how it turned out. I had to pay taxes for the first time in my career as part of an exploration company, which isn't, I suppose, the end of the world.
No, I always say when people ask me about taxes, I say, think of it as a success fee.
Yeah, that's right.
Now, one of the, we talked about Newmont, you talked about that structure. You've just mentioned Oceana Gold. Can you just talk to us about that one?
Yeah, so that's the most recent deal that we announced a little over a month ago. We announced a partnership with Oceana Gold and LOI to put three of our projects in northern Nevada in earn-in agreements. Very similar structure to the Newmont agreements, whereby they have some amount of minimum commitments totaling $2.5 million minimum commitment US into the ground, and then stage earn-ins individually on each of the projects. So all three projects are separate and carried to pre-feasibility as well, with that royalty component at the end of that as well. So yeah, I guess now we're sitting in a situation with those 5 projects. There's a potential for $150 million of partner funding across those 5 projects.
Nice work if you can get it. But you've also got, and I don't want you guys to get confused, ladies and gentlemen. It's a really smart, I think, quite a smart way to do things. They've got some of the majors coming in funding projects, but you've also got some projects that you own 100% of. Are you looking to have those as an earn-in as well as some of the majors, or are you deliberately keeping those outside the book, so to speak?
Yeah, so I mean, maybe this is a good time to talk about why we consider ourselves more of a hybrid company than a traditional prospect generator. Okay. So, on the end members, prospect generator company would basically rely exclusively on partner funding for advancing any sort of significant exploration on their projects. So they're continually, putting together ideas, trying to attract partners on the basis of those ideas to do the work on the ground. On the other end member is, your sort of traditional junior explorer, where you go out to the market, you raise some money on usually a single asset, and then take a punt and see if you can drill into something. And we're sort of in between, where we definitely rely on a lot of partner funded exploration to maintain a certain pace of activity and baseline of news and exploration into the ground, but also are looking as well always to identify opportunities within the portfolio where we can cost effectively take a few swings on our own partner funded or 100% funded basis, to give our shareholders the potential for some pure upside and exploration success. Now that's done selectively, and it's not the sort of thing where we'll spend many, many millions of dollars testing an idea. But if there's an idea that we think we can advance in a meaningful way with a fraction of that amount of capital, I think that's a good shot for our shareholders, and it really fits in well with the overall business model too, because the major mining companies do like to see people who are willing to put their money where their mouth is, and put some skin in the game here. And so when we drill those projects, typically it's sort of 3 to 5 scout holes in one of these, and we'll do maybe 1 or 2 a year on our own. The reason I like it is because you kind of have 3 outcomes here. You can hit a home run, which is obviously great for our shareholders, and then we can go back to the market and finance, to continue advancing that. And that would obviously, be a lead project moving forward. The other end member is you could strike out completely, which is, in this model, not the worst thing in the world either. You no longer need to continue to deploy your resources to that project. You can move on and focus on other things. That's part of the game. More often than not, though, it's a bit of a middle ground where you hit some sort of proof of concept on your initial thinking, but don't hit that ore grade intercept that'll attract market interest to finance it moving forward. However, in our experience, those sorts of results are viewed quite positively with the major mining companies who make their decisions on a technical basis. And de-risking a project like that by proving the concept allows us to go to them and negotiate a more favorable deal moving forward. So there is, I think, a lot of synergies between that sort of activity and the overall business model.
Okay. Now I think you listed in 2021, so you're still quite young. And you've got skin in the game. I think are you one of the larger shareholders?
Yeah, I'm the biggest individual shareholder.
Aha. So you're in lockstep. What's your biggest challenge right now, do you think?
It varies week to week, I would say. The biggest challenge, I think, right now is looking to scale up in a sustainable way in a market that is a bit uncertain still. I mean, we all definitely think that we're in the early innings of what could be a great bull market here. And what weighs on me is how aggressive do we really get at this time, and how much of our shareholder capital do we want to deploy into growing in advance of a business or a great market versus being a little bit cautious to make sure that we don't get out over our skis, and can continue to execute our business model, continue to mitigate dilution and create value on a per share basis moving forward, almost no matter what. So that's the balance that at the early innings of a market like this is a bit difficult to navigate, and it requires some serious thought.
I Before we wrap it up, I just want those people listening to understand more about the corporate structure, if you like. I think Newmont owns just under 9%. Talk to us about the corporate structure, because what I'm looking for is those people that are listening to say, because it wasn't that long ago your shares were trading at 17, they're now about 44. So what I'm looking for is give us a structure, and I want to figure out if you're fully valued right now.
Yeah, so well, with the recent financing with Rick Rule and Jeff Phillips, you may know Jeff Phillips is one of his big criteria is the corporate structure, and making sure that it's set up in a way that provides for future leverage. in our case, I think that translates to still a relatively low share count with under 75 million shares out. But the key thing is that reporting insiders control about 30% of that 74 million. On top of that, Centerra Gold has come in for a 9.9% equity piece in a strategic investment. And Newmont owns, just under 9%. So between us and those two majors, we have about half of the stock tied up. So it's quite a tight share structure, which really allows, quite a bit of leverage moving forward to positive success. And when you look at the value proposition of any sort of success scenario across our portfolio, given the deal structures we are already described, I think there's a tremendous amount of upside given that sort of share structure with our current valuation.
When you say that there's a significant upside, again, sorry, I might be being a bit thick here, but because I know that Jeff is very keen on structure.
Yeah.
Where do you see that significant upside? Again, I'm going back to shareholder value. I'm talking to my audience that say, why should I be looking at Headwater Gold against so many others that are out there?
Yeah, implicit in that statement was, the belief that I have that the best driver for upside is true discoveries. True discoveries that are going to move the needle for a major mining company. If you take sort of the Newmont projects as an example, you can translate that, I guess, into the size of assets that Newmont wants to bring into production. We're talking billion-dollar assets. And
okay.
so if we're maintaining a 25% carried interest to PFS plus a royalty component on top of that, that's a pretty big piece of a pretty big pie, in the hundreds of millions of dollars. So there's plenty of room, I think, for, a major win across, the broader portfolio. And because we have so many projects, being advanced right now by partners, so many projects in the portfolio to bring additional partners into or advance ourselves. Just the odds, I think, are in your favor if you're looking for discovery stories.
And I think it's important to note as well, ladies and gentlemen, that the market cap right now, as I speak in the first week of September, the market cap's about 30 mil Canadian. And Caleb said just earlier that, the majors are spending, I think it's 150 mil. Just
That's US, actually.
That's US.
Yeah.
US. Well, that's a good point as well. Good old currencies.
Yeah.
All right, let's wrap it up. Caleb, I found this really interesting. And by the way, ladies and gentlemen, if you're sitting in Australia thinking, well, it's listed on the Canadian Securities Exchange, that's too hard. No, it's not. There's a company called Interactive Brokers. Interactive Brokers will allow you to buy shares, and I'm not suggesting you should. Again, do your own research, but the ticker code is on the CSE is HWG. So Interactive Brokers can help you with that. But let's wrap it up, Caleb, with 3 reasons you think people should sit up and take notice of you right now.
Okay. Well, I think the one obvious thing is, we're looking to talk with groups or people that are looking for increased exposure to exploration in a rising gold environment.
Mm-hmm.
Both the deals that we have with the majors and the investor interest we've attracted from people like Jeff Phillips and Rick Rule, I think should bring us to sort of the top of people's list in what's a kind of an overwhelming sea of junior companies. But the majors have done their due diligence on the technical side, and certainly Rick and Jeff have done their own due diligence on the value proposition side from the corporate level. Obviously, everybody needs to do their own due diligence as well, but I think that's a great starting point to at least have a look.
Yeah. That's one. I got 3 reasons.
Yeah, I think the proven business model that we've been able to execute over the last few years while minimizing shareholder dilution and focusing on value creation on a per share basis. That's the goal moving forward, not just to grow the company in market cap or size overall, but to actually deliver value for our shareholders on a per share basis, with obviously my incentives being aligned as a major shareholder of the company. So I think that's two, and I'll give you the third, which is that perhaps the easiest thing is Nevada and high grade gold go hand in hand. And I've already said it. What do the major mining companies want, and where do they want it? Well, one of the best answers to that is high grade gold in Nevada. And we're one of the most active groups, if not the most active junior explorer pursuing that model.
Caleb, it was an absolute pleasure to speak with you today, ladies and gentlemen. I love bringing you stories like this, and just take a good look. Headwater Gold on the CSE, HWG, but also on the OTC, HWAUF. That's a mouthful, Caleb. Please come back, give us some regular updates. It's been great to have you on board today, ladies and gentlemen. As I said before, do your own research, but as Caleb outlined, the majors like what he's doing and what they're doing there. And the reason it piqued my interest was Jeff Phillips and Rick Rule popping up on the register. So really interesting times. Caleb, thanks so much for joining me today on Making Money Matter.
All right. Thank you very much. That was great.